morning everyone, this is Peter Yusuf, Senior Analyst at IronFX, giving you a small preview for the week ahead. As the Christmas holidays drew to an end, the markets were shook by a mini crash on Thursday and the release of the US employment report for December, along with Fed Chairman Powell's comments on Friday. Markets seem to be turning their attention to the US-Sino negotiations beginning this week, while the release of the FOMC meeting minutes on Wednesday and the US CPI rates on Friday could provide some volatility for the USD. In Canada, BoC is to release its first interest rate decision for 2019 and is expected to remain on hold at plus 1.75%. Currently, CAD BoC imply a probability for the bank to remain on hold of 88.75%. Should the bank remain on hold as expected, market focus could turn to the accompanying statement and the following press conference of BoC Governor Stefan Poloz. The recent deceleration of the inflation rate, both headline and core, are currently below the bank's median target, and with persistently low oil prices could provide enough argumentation for the bank to maintain a more dovish tone. Across the Atlantic, the UK could experience further political instability due to Brexit. The rescheduled Parliament vote date is nearing, and debate is to start in the UK Parliament this week. UK's PM Theresa May over the weekend did not exclude the possibility of a new referendum nor of multiple parliamentary votes. We see the case for Brexit to start reeling in again, getting more intense, and the political uncertainty continuing to weigh on the pound. On the financial releases front, near the end of the week, we get the UK GDP growth measures for November, which along with the manufacturing output growth rate for the UK for November could be of interest for pound traders. On the other side of the world, and as the AUD is considered a close proxy for the Chinese economy, we could see the developments surrounding the US-Sino negotiations to affect fundamentally the Aussie's direction. Should there be a positive outcome or some further positive developments, we could see the AUD getting some support and continue its recent upward direction against the USD. On the other hand, should the negotiations start sending out negative signals for the outcome, we expect the Aussie to slip as risks for the Chinese economy are to rise even further. Also, the release of Chinese inflation measures on Thursday, such as the CPI and the PPI, which are both currently forecasted to decelerate, could cause the AUD to slip, as they would indirectly confirm a possible slowdown of the Chinese economy. On the other hand, the domestic market seems to remain rather stable, as the Australian retail sales growth rate for November is expected to remain unchanged at plus 0.3% month-to-month on Friday and could provide some comfort for the Aussie. For more information and trading ideas, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+. This is Peter Yusuf from IronFX, wishing you solid trading.